Hey guys, welcome to the channel. Welcome back to another video. On today's video, let's have a conversation. Let's talk about what's going on with the economy and what's really going on with the economy, guys. I know it's been a while since I've been here, about a week or two, but if you can hear me as you come in, guys, let me know where you're coming from, what city, what state, what county, what country, and give me a thumbs up if you can, please. Just give me a thumbs up if you can hear me okay. But what is really happening in the American economy? This won't be a terribly long video, but it'll be a sort of a kind of a summary of what we're looking at today, guys, because we actually have this presidential election coming up right around the corner. And, you know, the news about the economy is going to start getting a little interesting as we're here, guys. So good to have you here. Kenneth is here. Lewis is here. By the book is here. Guys, let me know that you can hear me with a quick thumbs up. I'd appreciate it. Got somebody checking in from Brazil. Wow. Thanks for the thumbs up. Appreciate it. Long way. Brazil is quite a ways from where we are. But what happens in America does kind of have an effect on large parts of the world. So I just want to have this economic conversation, but I want to keep it in really plain language so everybody can understand. I'm not going to talk above you or anything like that. We want to make sure everybody understands because what we do with our money and our investments, really, the economy plays a little bit of a role in that. Now, when it comes to personal finance, you're going to be, developing your plan and working on your goals and investing your money. But sometimes these outside factors can actually sort of play a little role. So we want to keep up with those as well. So appreciate you checking in from Modesto, California. Nigel from Winnipeg. Good to have you, Nigel. Big up Miami. Appreciate you, Mo Blessed from Toronto, Canada. Good to have you. So, what is really happening in the American economy? By the way, hit the thumbs up button for me when you come in. Just tap that like button for me, and we can get the ball rolling fairly quick. So, latest GDP news came out just yesterday, guys. The GDP numbers came out this morning, and it was the advanced numbers for third quarter GDP. Now, what is third quarter GDP? Third quarter GDP is what? January, February, March, April, May, June, July, August, September. We get the GDP numbers, the first reading, the advanced reading in October, which is what we got. So every time we get a GDP reading, it's going to be the advanced, the second, or the final. And so we'll get the second reading of third quarter GDP in November. And then they'll shore up all the final numbers for third quarter GDP in December. So we got our first look at what the July, August, September third quarter numbers look like for 2025. Hey, good to have you, John Joe, in the house. Great day to have you. I know it's Halloween, right, guys? And everybody's out there doing their trick or treating. But I said, you know what? This is pretty important. Let's have this conversation anyway. So, the US economy has had pretty decent growth, what they call sort of steady growth on the back of consumers still spending money. Man, we are a spending machine in America. I mean, we just spend and we spend and we spend. And then for some people that don't spend, you say, well, some people that are spending, you say, what's going wrong? Well, the economy and the economy, but you're out here spending and you're spending. So there is a slight cooling that we see coming down, right? But for the most part, we're spending and we're entering a spending season, right? November, December is usually the time when you see a lot of retail spending because of Christmas and the holidays, right? So I think it was the Atlanta Federal Reserve's website where I kind of got the information that the real GDP growth is estimated to be once all the numbers are in around 2.8%. However, there were earlier estimates that it's 3.3. So GDP is sort of down based on what they thought it would be, right? Now, the Fed made a note that there's been a gradual slowdown in the job growth, and we'll see that tomorrow. Tomorrow, we're going to get the job numbers for September. Is it September? Well, we'll get the job numbers, I believe, tomorrow, right? And so far, jobs have looked at being right around 4.1% in the recent months. It stayed pretty stable right about there. Not to mention wage growth, right? Wage growth has been sort of right, which sort of helps balance out inflation. So overall, the economy's not going too bad, but I want to dig deeper into it, right? So we know what the Fed's goal is, the Federal Reserve, right? Fed's goal is what, a two-part goal, right? Maximum employment, what they call stable prices, right? So I'm looking forward personally. I don't know about you guys, but I'm looking forward to the Fed's upcoming meeting here. I think in about a week or so. And I think what they do with the Fed funds rate, and we'll talk about that in a little bit, but the Fed funds rate, I think it may go down another 25 basis points, right? A quarter of a percentage point, I think, is what we're looking at. So that's where we are sort of with GDP. GDP is just the value of goods and services produced in a country in a given time, usually measured in quarters. GDP, value of goods and services. By the way, GDP is the end value of goods and services. Adjusted for inflation is the real GDP. But listen, GDP is not always on the money, right? It's not always there's some problems with measuring a country's economic growth through just GDP, right? It's the most popular and it's the main indicator of a nation's overall economic health, so to speak, right? But it leaves some stuff out when you just focus on GDP alone. But we know that when GDP goes up, it's usually interpreted as a sign that the economy in that country is doing well for that quarter, even though you as an individual may not feel it, right? And of course, when GDP is going down, that's a sign that the economy in that company, in that country, is sort of what they call like slumping, right? It's not going well, right? Demand for goods and services are down, unemployment goes up, people have less money in their pockets, and next thing you know, people aren't buying as much. But this is the machine that is set in place in countries to keep the money flowing and the money going, right? Now, I think it's important to mention when we talk about GDP that the textbook definition of a recession, keep this in mind now. Textbook version or rendition of what a recession is a sustained period of two straight quarters of a negative GDP. Two straight quarters of a negative GDP, right? Usually accompanied by, increased unemployment, uh, you know, negative growth, and so forth. So let's see who we got. The Bronx, South Bronx, South Bronx. KRS1. I'm a rap connoisseur, guys. You probably don't know, but I'm a rap connoisseur of the early 80s up until probably late 90s, right? So over there, you can't see it. I got the Treacherous 3 album, first album I bought back in 1983. Treacherous 3. I got the Otis LL. I got the first Too Short. I mean, I got all this old stuff that I've had for years and years and years. I don't really listen to it a whole lot, right? But I still got it over there, and that's one section of my album collection. I went way off a tangent, right? Because I started saying South Bronx, South Bronx. Yeah, I got that first KRS1 Scott LaRock. Let's see here. Grady from Australia. Good. Yeah, Australia. Good to have you here. Let's see. We got in the house, made it through two hurricanes. John Joe, glad that you made it safe through those two hurricanes down there. So appreciate you being here. Dwayne checking in from Myrtle Beach, South Carolina, or what we say, South Kakalaki, right? Maddie's in the house. Good to have you. Somebody from LA. Looks like we got Lil Titan from LA. Good to have you here. Yeah, somebody said KRS1. Yeah. Yeah, the teacher, edutainment, LL Cool J, all that good stuff. Let's see. Chicago, Daniels. I think it's south side, north side, west side of Chicago. Let's see. First Outcast, 1994, 93, 95. Yeah, I was there. CeeLo. Let's see here. Hey, San Diego, Bill Peaches in the house. Good to have you here. Appreciate you being here, Bill. Let's see here. We got, hey, from Canada, Cincinnati, Ohio's in the house as well. So we got them from all over, man. So glad to have you guys here. Glad you can hear me. I had to get my audio stuff worked all out too. But so The goal for every single country, again, guys, we're just having a conversation about the current state of the American economy right now as we speak. The goal for every economy, every country is to always have an increasing GDP, guys. Go up, 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 up. That's growth, 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 growth. You never have a country that wants a down GDP, right? Again, they want to keep the machine running, right? Let me just pull up in a quick article real quick to just kind of hone in on what I was talking about. Man, you guys sound like you want to have a rap conversation. Maybe we do that one day. We're gonna here talk about music one day. Let's see here. Give me 1 second here, guys. Let me pull this up, share my screen with you if I can. Let me actually make myself a little bigger and give me 2 seconds here. I think I got the wrong article up. Give me 2 seconds. I'm gonna find the right one. I promise you. Let's see here. BAP, and then we go BAP, and then we're gonna go BAP. Here we go. There it is right there. Got it. All righty. The right article in the house. Okay, so let me go over to this article right here. U.S. economy grew at 2.8% paced last quarter. We're talking GDP, gross domestic product, right? Gross domestic product. Let's make that bigger. All right, let's get off the ladies there. Here we go. The U.S. economy grew at 2.8% pace last quarter as consumers continue to open their wallets despite elevated interest rates. Listen, people are spending. I'm not sure if there's anything the Fed can really do to stop people from spending so much. Even though the rates have gone up, people have continued to spend and the economy continues to grow. It's slowing down a little bit. Forecasters expected the country's GDP, the total of value in goods and services, to come in at 2.6% in the 3-month period ended in September, according to a survey of economists by the data firm FactSet. The latest GDP figure is down slightly from the second quarter's growth of 3%. So 3% last quarter, 2.2 now we're down a little bit, right? The American economy, the world's biggest, has shown surprising resilience. Remember all that talk about a recession 2 years ago, and then more talk about the recession a year ago? Never came to fruition like we thought it was, right? It says, in the face of sharply higher borrowing rates as the Fed tightened monetary policy in a bid to tame inflation, despite the widespread predictions that the economy would succumb to a recession. However, it's kept growing with hiring and consumer spending. By the way, guys, let me say this before I go further. I got to say this. Please let me say this. You always have to realize your source of information, because we're reading something on CBS.com. This is CBS. So your source, CBS, is going to give you the nice version. But if I flipped over here to New York Post, personal savings sinks and economic growth slows in last GDP report before election. Notice how it's worded. It's worded unfavorable to, say, the current presidential administration from the New York Post. Personal savings sinks, economic growth slows. Those are key words to evoke emotion. Now, when I go back over here to CBS, their headline was U.S. economy grew at a 2.8% last quarter, powered by see the difference? You always have to understand your source where you're getting your information. CBS is going to make it so that it sounds good to the current administration who is about to be go up for an election in a week. CBS sounds good. The New York Post makes it sound terrible. Two different sources, two different sets of keywords to evoke some type of emotion, right? So when we go through the New York Post story, it says the U.S. economy grew slightly slower than expected in the third quarter and amid easing inflation and strong consumer spending. The Commerce Department's Bureau of Economic Analysis, the BEA, released its advanced estimate for third quarter GDP, which found the U.S. economy grew at an annual rate of 2.8% in the third quarter. Says economists surveyed by LSEG had expected the economy to grow at 3% in the third quarter. So the report also finalized second quarter growth at 3%. So 3% finals, the final reading of second quarter, 3%. The reading for third quarter, they thought would be 3% again, but it's actually 2.8%. So the economy is sort of slowing, but if you look at the headline from CBS, it certainly doesn't sound like the economy is slowing, right? So you always have to consider the source where you're getting your information from, especially during an election season. When one set of uh, people are trying to make it sound good, and another set are trying to make it sound bad, right? Let's stay with this article. Business investment rose by 0.3% in the third quarter as private inventory slowed and residential fixed investment decreased. The report showed that current dollar personal income increased by $221 billion in the third quarter, a smaller rise than the $315 billion in the second quarter. So it goes on. I'm not going to go through this entire article. I just want to really point out to you guys, watch where you're getting your information from, because look, the information can be skewed depending on who's actually reporting it, right? So something to think about. Let me go ahead and make that smaller somewhere. All right, I'm going to drag it back over to my big screen over here. All right. So basically, guys, GDP numbers can't give you everything, just so you know, right? Full disclosure, GDP numbers don't tell the full story, because we're saying, oh, the economy grew by 2.8. Yeah, it wasn't 3%, but it looks like the economy's doing well. And then you go down the street to buy a loaf of bread, and a loaf of bread is about $1.50 more than it was a year ago, right? Or you go to rent an apartment, and the apartment that was $1,100 last year or 2 years ago, now it's at $1,600 a month. And so you're saying to yourself, well, why does the economy look like it's growing, but when I look at my wallet, it don't look like it's growing, right? Listen, the GDP doesn't consider things like, um, it kind of leaves out income inequality, right? You could have a country could be growing and growing and growing, but also have significant poor people in the country as well. But the GDP doesn't reflect or show anything about the poor people in the country, right? So it GDP is only reflective of those that are actually out there spending the money and buying the stuff, or the businesses that are out there spending the money and buying the stuff, not even considering the people who are on the bottom end of the podium, of the bottom end of the totem pole, so to speak, right? So GDP also doesn't track, let's say it tracks more the formal activities, right? So the side jobs, side hustles, all of the unpaid work, like, people babysitting your kids and stuff, or people volunteer. None of that is considered in the GDP. Let's say that all of a sudden there's a million less people volunteering their time and services. Well, the GDP is not going to reflect that, because that's a whole nother animal that's not looked at in the GDP, right? So it doesn't look at every single thing. We got to keep that in mind when we look at those numbers. Those numbers of GDP are just a report out to the society, and can be used and manipulated and propagandized to make it sound good, make it sound bad, make everybody happy, make everybody panic and fear, full of fear, right? So keep, not to mention the quality of life, right? So GDP doesn't capture indicators like how healthy the society is. What about the quality of education of a society, right? How about the fact that some people now have to work 60 hours a week that were working 40 hours a week 10 years ago, right? Like, GDP doesn't measure any of that, right? So we have to be careful. And this is why I say what's really happening in the American economy, it's going to look one way on the surface, but when you turn around and look at your own personal life in terms of how you're doing, how hard you're working now as opposed to how hard you're working before, how much extra cushion of income do you have left over as opposed to 10 years ago or 3 months ago, you got to think about that, right? There's just other factors that people don't really think about when it comes to GDP, right? Now, let's talk real quick about inflation, okay? Inflation, inflation, inflation. Inflation measuring the rise of prices. Look, prices never go down. Just make sure we understand that, guys. In an economy, prices will almost never, I say almost never go down. By the way, guys, if you got a question, drop it in the chat. Let's see what you want to talk about. I don't mind answering a few questions, having a little back and forth as well, because I'm just kind of flowing. I'm just having a general conversation about what's really going on in the economy right now. And I appreciate you guys being here more than you know. Let's see here. Okay. I think that was, you're talking to somebody, not me. Okay. So we got headline inflation, right? We hear about headline inflation. That's all the good headline inflation that includes food and energy. And then we got the core inflation that takes out food and energy. Why does core? Okay, the Fed, they look at the core inflation, excluding the volatile stuff, which they call food and energy. They call that more volatile, food and energy. And by the way, food and energy are always tied together. Why? Because it takes energy to get you fed. It takes energy to put food on your table, right? Why do you say it takes energy? Because it takes cars, it takes ships, right? Remember the port strike we had a few weeks back, right? It takes ship. They said that almost 50% of all the things sold in America comes through the East and the Gulf port. So the food we eat and consume, it takes ships, airplanes, trucks, trains. It takes all these forms of transportation to get the food to McDonald's, to get the food to Chipotle, to get the food to Kroger's or whatever your local grocery store is, to get the food to the restaurant. Takes energy, right? Because they got to fuel the plane, fuel the truck, fuel the ships, right? Fuel the trains that transports the bananas, the fruits, the breads, the milk. It has to, I don't care if you buy it local, it's still got to take, you still got to get on a truck, right? To have it delivered to you. So the point being that food and energy are tied together, and they're typically more volatile. They go up and down, swing up and down. So when you see CPI, inflation, that includes food and energy. When you see core PCE or core inflation, that does not include food and energy. And the Fed says we want to get rid of food and energy because they go up and down so much and they're so tied together that we want to get rid of those because it'll give us a better, more clearer idea of what inflation really is. Actually, core PCE inflation is really a broader measure than just CPI, right? So, guys, do me a favor, hit the like button for me. Hit the like button for me. I gotta say it. Sometimes people have these YouTube channels and they do like commercial breaks or something. I don't have any of that, but I just like to say, hey, hit the thumbs up. Check out the free stuff in the description box. Let's do that. Check out 24 Laws of Money in the description box, free ebook. Check us out at smartmoneybro.com. And check us out. I'm trying to grow my Instagram. I'm Smart Money Bro on Instagram. I don't know anything about Instagram, really. I'm not very good at it. But join me over on Instagram at Smart Money Bro, and you can sort of get a little bit behind the scenes. Also, check out Patreon below. I got a lot of stuff. Check out also, we got Mint Mobile, my channel partner on all of my lives. Check them out. I use Mint Mobile. Super duper duper easy, inexpensive, excellent service. I really enjoy Mint Mobile. So I just want to have a little short commercial break to say do all that stuff right down below, right? But the whole purpose here is the Fed has two mandates, guys: price control, maximum employment, and no, they don't want everybody working. That's not what their goal is, right? So, um, so PCE price index, headline inflation, CPI inflation, or core PCE. So the numbers came out today. Core PCE rose by 0.3% month over month. That means inflation is up month over month, right? Inflation is higher. It rose more this month by 0.3% than it did last month, right? Core PCE inflation without food, without energy in there, rose 2.7% year over year. Now, you're probably saying to yourself, well, that means prices are still going up. Yes, prices will always go up, but it's whether or not they go up a lot, that's high inflation, or if they go up a little, that's low inflation, right? The Fed says we want the core PCE inflation to be 2%. If we can get it down to 2%, we're going to stop making money cheaper to borrow. We're going to stop lowering the Fed funds rate, right? So it's steadily going down, but over the last 2 to 3 months, I think 2 to 3 months, the year over year core PCE inflation has stayed steady at 2.7%. It has not got down to what the Fed wants at 2%. It's being extremely, extremely stubborn. But again, if you look at CNN, it's doing wonderful. And if you look over here at another article from a different publication, it's horrible, right? Let's see here. Thank you so much for the super chat, Chewy. Missed you too. Good to have you here, Chewy. Thanks for chiming in. I appreciate you being here. Let's see here. Somebody said, who does everyone think will be better for the economy? That's a good question. Excellent question. Love that question. We got less than a week to go. 5 days before we have a new president. Not necessarily a president that is going to be sworn in. That doesn't happen until January. But we have a new president or possible new president coming up. Well, not a possible. It's going to be a new president one way or the other, right? Now, as you guys know from this channel, I love a free market economy. I love a free market economy. I do not like socialism. Although we have some socialist pieces in our government. We know that, right? Social Security, right? We got a lot of different pieces of socialism. But I don't want a whole lot more. Let's put it like that. No, I like a free market economy where, where you got, demand and supply is helping make decisions as opposed to the government coming in and telling you, don't do this and don't do that and get off of this and do that. I don't like that, right? Free economy, right? Let's see here. Sammy, thank you, Sammy. Appreciate you. But again, Chewy, thanks for that super chat, man. I appreciate it. Let's see here. I recommend you on other YouTube financial channels. Thank you so much. Appreciate that, Skittles. Not sure I like it, but I push positive and help. I thank you so much. Again, I appreciate that. Let's see. Somebody said Democrats want us dependent on government. No, thanks. Listen, you don't want to depend on the government. I don't want to go too deep into that right now, but you definitely don't want to do that. Let's see here. Somebody said Project 25 would destroy the economy. I don't worry about Project 25. I really don't. That's not a big deal. Let's see. Professional, but John, thank you so much. I appreciate it, John. Let's see. I'm just seeing if I have any questions. I thought I seen a queue, but it must have went away somehow. Let's see here. I foresee a 2008 scenario happen within the next 5 years, perhaps. Roman, perhaps. We'll see what happens. Let's see here. Just kidding. Let's see here. Okay. All right. I agree. I always said that once you get used to paying high prices, the inflation is under control. We'll never go back to those lower prices. No, that ain't coming back. Nope. Prices never go down, guys. They just go up slower or they go up faster. When they go up faster, we're all nervous and scared. When they go up slower, we're cool, right? No big deal. Hey, inflation's low. We're all doing well. And prices are still going up, right? The big thing was, I think, the price of home or rentals, right? Housing became is pretty unbearable even now for a lot of folks. And that's still been a big rub, right? Let's see. I thought I saw a queue. Maybe I didn't see a queue. If you put a queue in there, guys, if you put the last queue in there, drop it back in there for me because I totally must have missed it. And I'm upset about missing it. But let me take a look at a real quick article, guys, about the GDP. Give me 1 second here. Let's see if we can pull up this article about the GDP. Let's see here. Let me move this back over here. Man, the coordination is incredible of all the stuff you got to coordinate behind the scenes, right? So that was the last article. Let's see if we can't find the GDP article here real quick. Here we are. Or I'm sorry, inflation article. This one's off of CNBC. Again, always understand your source, guys. Inflation increased slightly in September and moved closer to the Federal Reserve's target, according to the Commerce Department. The PCE price index showed a seasonally adjusted zero point 0.2 increase. That's the price index, not the inflation. With the 12-month inflation rate at 2.1%, both in line with Dow Jones estimates. The Fed uses the PCE reading as its primary inflation gauge, though policymakers also follow a variety of other indicators. Fed officials, obviously, we said, target inflation at 2% annual rate, right? A level it has not achieved since February of 2021. The September headline inflation rate was down 0.2% from August. Though the headline number showed the central bank nearing its goal, the inflation rate was at 2.7, the one excluding food and energy, after the so-called core measure increased by 0.3% on a monthly basis, and the annual rate was 0.1 percentage higher than the forecast. The forecast, right? They forecasted. So the deal is that inflation has slightly gone up or stayed the same. It hasn't gone down like they thought or wanted, right? Down to the 2%. The move in inflation was tilted towards service prices, which increased by 0.3%, while goods prices decreased. The fourth outright deflation figure in the past 5 months for the category. Housing prices eased off their pace, rising at just 0.3%, right? So the report comes with markets betting heavily that the Fed will cut its benchmark short-term borrowing rate, otherwise known as the Fed funds rate, when it meets next week. Yes, the Fed is going to cut the Fed funds rate down by 25 basis points. I'm almost sure about that. And I think it's priced into the stock market by like 80%, right? 60, 70, 80% they're going to cut, right? So that is, I don't want to dig deep into that because I don't like doing too much reading on my lives, right? So that's where we are, right? Now, if you look at Wolf Street, it says inflation doesn't want to cooperate. PCE price indices for core services and durable goods worsen further month over month. Again, a different take on it because it's a different publication that wants to push a different message. So you always got to check that, guys. And I'm gonna go ahead and remove that so I don't want to go over or read that article as well. But I just wanted to point that out to you guys and say, look, I suggest that you look at your money, right? I see a lot of stuff going on, rhetoric online right now about how everything is better. Me personally, I just use my common sense and look at what it costs me to buy groceries and gas and all that good stuff today versus what it was costing me a year or two ago, right? What concerns me a lot of times is the fact that a lot of people they only read CNBC News. And if you only read CNBC News, you're getting a rosy picture of what the economy is doing right now. If you only read the Washington Post, is it the Washington Post or the New York Post, you're getting more of a cynical view of what is happening right now in the American economy. So read more than one publication coming from different standpoints. Just read the same information from two different places and you'll see how different it is. But you got to look at your own personal situations. What's happening with you right now, right? That's the best way to figure out what's going on in the economy, right? But inflation, inflation is interesting. Inflation is really just a measure of the volume of money that's in the economy, the money supply, right? And you compare the money supply, you compare the amount of money floating around, the liquidity, what they call, right? Compared to the amount of goods and services that are available to be purchased, right? Inflation goes up when the money supply goes up, inflation goes up. Because when the money supply goes up, that means people have more and more money to spend. And when people have more and more money to spend, that means demand goes up, right? Because people have more money to spend. So inflation goes up when the money supply goes up or when the amount of goods goes down, right? When you see the amount of goods or the supplies go down, you'll see that inflation will go higher because there's less stuff, right? So just want to point that out. So the money right now, we're at 2.8% GDP, 2.7% inflation for core, 2.7. They want to get that down to 2. Uh, we'll see what happens, right? We'll see what happens. But sometimes, just like the GDP, let me say this too, just like the GDP, sometimes the inflation numbers, they don't take in consideration everything either, right? First of all, where they're collecting their data from, right? Where they get their data from relies on like surveys and samples and of a basket of goods, right? So you have to keep in mind that they're getting their information from surveys and sample of goods in certain places. What it costs for a gallon of milk in West Virginia ain't the same what it costs for a gallon of milk in San Diego, right? So that basket of goods, how reliable is that basket of goods that they're measuring the inflation from, right? So also spending trends. Think about when we had the pandemic and there was a shift in the trend over the course of 2 months, right? 1 or 2 months, everything shifted. There's seasonal adjustments, right? See, if you own, listen, let me say it like this. If you own a store and you know people are going to be out buying more during the season of November and December, then would you as a business slightly increase? Because remember, the money supply is going to be higher in November and December because everybody's out buying in America for the Christmas season. Are you going to keep the price of your goods at $1, or are you going to put the price of the goods at $1.02? Because of the seasonal adjustments that you may make, right? So if you get a notebook, if you buy 10 notebooks in August, is it going to cost the same as buying 10 notebooks in February? What happens in August? All the kids go back to school. So as a retail person, a retail business, there's some seasonality to your cost. And are those seasonalities built into the basket of goods that they measure for inflation? Right? Something to think about, right? Also, the lag time. And I don't want to dig deep into the lag time, but listen, overall, there are factors that make inflation not all in the inflation numbers, not all what they say it is. Because when I look at my grocery shopping, I can't get a whole lot of stuff in my cart, and it's going to be already over $200. But 2 years ago, 3, 4, 5 years ago, I filled that cart up. I got a whole lot more. But somehow I go to the internet and they tell me the economy is doing wonderful. Are you sure about that? Right? So you got to use some of your own thought process on this thing to figure this thing out. Right? Yeah, we have an election coming up, and that will be huge. Let me go back over here. Let me see what you guys talking about. Let's see. Oh, we're getting political in the chat. I don't mind. You guys can get political. Let's see here. Private companies artificially jack up prices and call it inflation. Yeah, I look at price gouging. I think one of the candidates out there now said something about price gouging. Look, price gouging happens, but at what point does it become gouging? And at what point does it become raising my prices as a business to cover my cost of workers, right? Or the fact that now I got to pay my workers $22 an hour instead of $21 an hour. Now I have to sort of raise, I don't know, right? If we got business owners, maybe you guys can chime in. Let's see here. If you have that fear, let's see, should we in a house? Let's see. So how will the gap between wages and prices close or continue? So that's a good question, Chadford. Will the gap between wages and prices close? That's the goal, and hopefully it will, right? Hopefully it won't continue to expand, but you just don't know. Let's see. Blue chips are overvalued. I think a lot of things, this is my opinion, guys. Don't beat me up. I think a lot of prices in the stock market are overvalued. I made a video about 2 or 3 weeks ago about the fact that the stock market, you got Goldman Sachs, JP Morgan Chase, and some others out there that are predicting somewhere between 3% and 8% for an S&P 500 return over the next 10 years, as opposed to the 13% which we've had in the last 10 years. And I think that's fairly accurate in my opinion. I think we're going to be poised for a pullback. And if you look at all the indicators, I don't care if you use the Buffett indicator, if you use the PE ratio of the S&P 500, which I think is sitting at 27, and typically average over the last 100 years, it's been at about 17. I think that's always an indicator of an overpriced market when you look at the overall S&P 500's PE ratio. There's a lot of indicators that say the market is overpriced right now, overvalued. And I think we will see a pullback, right? Don't quote me, but it's just my opinion. What is a hedge against hyperinflation? I don't know. A hedge against, let's see if we got some consensus. A hedge against hyperinflation. Well, I tell you one hedge that I like and love, a hedge against all inflation that I like and I love is real estate. Get you a piece of real estate, it hedges against inflation every time, right? So when I say real estate is a hedge against inflation or hyperinflation, when prices go up, your rents go up. If you own a commercial building, when prices go up, what you charge businesses to have their business to lease out space, it goes up. When prices go up, what you charge those 4 tenants in that fourplex, those 2 tenants in that duplex, single family apartment complex, it all goes up, right? Sort of a hedge against inflation. One of my most favorite hedges against inflation is real estate. So, Roman, get you some real estate. You'll be protected against inflation. Some might say Bitcoin, perhaps, right? I'm not a Bitcoin guy, so I don't know. Let's see here. We need a free market and competition. Brian, I'm with you. I agree with you. Free market and competition, free economy. I'm way behind on the chats, right? Let's see here. Boom, boom, boom. Hey, Nate from KC. Good to have you here. I didn't see Robin Hood selling futures on the elections. I think I heard about that, right? I think I heard about that. I'm not a bettor though. I don't bet. So I don't bet on anything. So I don't really know a lot about what's the line out there on anything, from a basketball game to a football game to who's going to win the election, right? Let's see. Bitcoin will go higher next year. Perhaps. I'm not a Bitcoin guy. Guys, you got to remember, I built my wealth the old-fashioned way. No Forex, no crypto, no credit card arbitrage, none of that type of stuff, right? I did it the old-fashioned way. Chewy, thanks for the Chewy. Look at I gotta start having more of these live chats, right? No, Chewy, thanks so much. Let me show your comment. Appreciate you very much, Chewy, for the super chat. With the national deficit this high, I expect to go back to a 0% environment soon. Government needs to refinance debt as cheap as possible. Buy assets now. Well, the theory is to typically always buy assets, Chewy. You're right. I don't really see it happening soon, but perhaps down the road. I think we were at some record near 0% environment. I don't think we'll get there soon. Chewy, you could be right though. You could be right? It's all speculative at this point, guys. So again, appreciate the super chat again, Chewy. Thanks so much. Best way to get companies to reduce prices is to stop buying their product. Brian, I think you said a word right there, Brian. I agree with you. Let's see here. Let's see any other questions. I had to asked what your thoughts are on the production of only 3% returns for the S&P for the next decade. Okay, Willie Wilo, appreciate that. Again, I think 3% is a little low. I think it might be more like, which got at 3% was Goldman Sachs. I think most of the predictors The experts, the analysts are saying around what, 5 to 7 or 6 to 8%. I think that's probably closer to the truth. I think it's going to be probably about half of where we've been the last 10 years. I don't think we can sustain. Now, I could be wrong, but I don't think we can sustain or will sustain a 13% increase or 13% average annual rate of return for S&P over the next 10 years. Just my opinion. So be aware of that as an investor, right? Understand that we've been in a really sweet environment. Think about the environment we were in with interest rates, mortgage rates, say from 2012 to 2021. Beautiful interest rates, mortgage rates, 3%, 2.5%, 3.25%. Wow, that was unusual for a long time, about a 9 or 10 year stretch. And I think the boom we've seen in the S&P is also something that's going to change. Remember, all of this stuff is cyclical, right? So I think that we will see a change in the S&P and the overall market. I think there's some overpriced, overvalued stuff out there for sure. Let's see here. See if we got any more questions. Opinions on buying silver. Look, silver's cool. If you dibble and dabble in gold and silver, I'm okay with that. I look at gold and silver as insurance, not really as an investment. It could be an investment, right? Of course, I think, what is the ounce? The gold ounce is up to, man, I looked at gold like 4 or 5 months ago. It was like $2,100 an ounce. I looked at gold recently. Gold was like $2,700 an ounce, right? I mean, like, wow, boom, right? Again, it won't stay that way, but there's been a big boom in gold in the last several months. Silver's doing well. If that's what I wouldn't put my entire portfolio or 30% of my portfolio in precious metals, right? But if you want to have a small piece of it, and it also depends on, listen, if you're barely paying the rent and you got a car payment and you're staying at home with mom and dad and your job is not steady, then you better not have 50% of your investments in gold, right? However, if you got $500,000 over and parked in this brokerage, and you got 200,000 in that brokerage, you got a net worth of over $1 million, and you want to have a good 20 or 30% of your investments in gold, that's up to you, right? We got to remember that this money thing is personal, right? Personal finance is personal. Toon World, check out the description box. There's 2 ways to hook up with me. One, join our Patreon via VIP. Guess what? I say this all the time, guys. You got to hear me on this. Patreon VIP, to have a personal one-on-one conversation with me once a month for 20 to 30 minutes. Look at your situation. Let's devise a plan. It's super duper uncalled for cheap. If you just join our VIP over on Patreon, the link is below. If you want to do a one-on-one conversation with me for an hour and a half to 2 hours where we share screens and all that good stuff, we dig deep, you can do that too. There's a link to that in the description box as well. I probably don't talk about that stuff as much. I probably should try to promote it or talk about it more, but I don't. But there's ways. It's in the description box, and you can have a conversation with me one-on-one. Let's see here. Let's see. I'm just reading through the chats here. 25-year-old man, I've got to talk to you. Oh, okay. That's you, Tune. Yeah. Come on. Let's do it. Let's do it. Let's talk about it. Let's see here. Yes. Boom, boom, boom. CNBC ain't have a clue about time finance, about time finance. Hope my fellows don't fall for this crap, right? Let's see what happens. Put more money into the markets or save it in the bank. I'm putting more money in the markets, guys. I'm not holding tight to those banks right now. I'm not a big bank guy, right? I like, have what you need in the bank if you want to, or in high yield savings account or a bank for emergencies. But otherwise, you should be investing that money and making it grow. Money printing the value of the dollar weakening. Then the answer is simple. Let's see here. Money is unlimited. Bitcoin is finite. Let's see here. Source. Never get all your info from one source. No doubt, Mo Blessed. Absolutely. The Intelligent Investor. I just finished The Intelligent Investor. One Up on Wall Street, Psychology of Money. Good books. Let's see here. Chicago. I went and picked up a trade. Now I've been making over $200K every year. No college degree. Six sounds. Congratulations to you. Fantastic. And that's great that you picked up a trade. Fantastic. Now you're making the big money. You can do some big investing. Absolutely. Here, let's see here. Any more questions? Just see if we got a queue up here. Let's see. Good evening from Massachusetts. Massachusetts. Helen. Good to have you here, Helen. Let's see here. Why would I do that? Do people use gold now to buy their groceries? No. Listen, depends on where you are with your money, right? Let's see here. When the goods are the same but higher price, no doubt. And I'm way behind on chats. Let me see. Yeah, I'm about 10 minutes behind on chats, man. But at least I'm catching up, trying to make sure I don't miss nothing, right, guys? Hey, Deneen's in the house. Good to have you here. Let's see here. My friend just took my suggestion. I helped him open a Fidelity account. That's excellent, John. Paying it forward. He bought his first share of FXAIX S&P 500. It's an awesome feeling helping someone. John, you hit the nail on the head, man. That's why I'm here. The more people I can help, the better I feel, and the better I know that I've done my part. Start a business, create an LLC. I guess that's an answer to hedging against inflation. Real estate, nothing wrong with real estate. Adrianus, tell me if you don't like real estate. We can have that chat as well. Why do you not dive deeper into Bitcoin? Okay, why don't you know anything about Bitcoin? It's not that I don't know anything about Bitcoin. I actually have a Coinbase account. I own about $500 or $600 worth of Ethereum, right? So it's on my net worth statement. But I just don't dig deep into Bitcoin because I'm not sold. Don't get me wrong. I've followed Bitcoin since about 2016 when it was, I don't know what it was. It was way less than 20,000 or something like that. So I've had my Coinbase account for a long time, but I never dove into it because I just don't fully believe in Bitcoin just yet. I'm not saying it's bad. If you do it, congratulations, more power to you. But one thing I'm not going to do is come on here to YouTube and talk about something I don't know anything about or don't know much about, right? Everything I try to talk about are things that I've done, things that I've experienced, things that's part of my portfolio. Otherwise, I'm just on here blowing smoke about something I haven't done. So that's why I don't dig too deep into Bitcoin. I hope that makes sense. Somebody said I sold my mama's house and all in on NVIDIA today. Congratulations to you. Probably not a good idea. You probably should have kept that real estate, but that's all right. Let's see here. No, everybody likes drinking the Kool-Aid. There's more than one way to build wealth. Absolutely more than one way. I totally agree with that. Does a TSP pay out dividends? And what do you think a smart mix would be in my TSP? Photography asked a question. And so you guys don't know, TSP stands for Thrift Savings Plan. And it's a government. If you work for the federal government, like 3 or 4 million people do, and even the military, you can put towards the TSP. I'm in my early 50s. I'm about 80% C. I'm probably about 10% F, 10% G. But because I'm getting a little older, right? So I moved some to more safer, more fixed assets, F and G. But I'm still trucking along with a lot of C because I like the S&P 500, right? So that's kind of how I have mine dispersed. It depends on how old you are. If you're under 35 years old, maybe you need to be 95% C, right? And maybe a little bit of, 5% I for the international, whatever. But the older you get, the more safer you get. You could always go with L funds in the TSP as well. I hope that answered. Let's see here. Let's see. I'm just reading through chats to see if there's any questions with a Q that I could help out and answer for you guys. Dollar cost average. I'm all about dollar cost averaging. Absolutely. Ethereum. That's all I got is Ethereum. Don't own any Bitcoin. Hey, Mrs. Moore is in the chat. Good to have you, Mrs. Moore. Appreciate you being here. Thank you so much. Real estate, buildings, rental, best investment. Nothing beats it. Not stocks, not Bitcoin, nothing. Chewy. I'm going to have to high five Chewy. Boop. Long distance high five. Boop. All right. Chewy, appreciate that. Yeah, I like that statement. I'm a real estate guy. Right now, about 35% of my net worth is in real estate, right? I like real estate. Nothing wrong with real estate. I might buy some more real estate here in a couple of years, right? But I just like having something tangible that people need. Tangible, people need, right? It's very important. People need housing, a roof over their head. I got it. I got the solution. I got a couple houses right here. Okay, here, let me take care of you. Boom. They pay me for what it's tangible, right? Not paper. Let's see Al. Let's see here. I'm just scrolling through. Let's see what I got. Might miss a few. I'm heavy in the C too. Yeah, by the book said heavy in the C. Absolutely. Um, do I think the worsening economy will have an effect on rents and home prices? I'm hoping that there's a slowdown in rents. Although I do own rental properties, I'm hoping there's a slowdown in the home prices to kind of balance things out, right? Hey, Miss V, checking in from Seattle. Good to have you, Miss V. Let's see here. Do I think Nvidia can come back to 140 tomorrow? I don't know. Don't know. I think it will end the year over 140. That's what I do believe. That's probably not a stretch, but it's what I believe. I think it'll end the year over 140 in my opinion. Guys, hit that like button. You gotta hit the like button. That's only fair that you tap the like button. It's only fair that you stop what you're doing because I'm about to ruin. I'm going back to rap. The image and the style that you used to. You look funny. But you, actually, he says, you look, but yo, I'm making money, right? So, no, but hit that thumbs up button, hit the like button for me, definitely. Thank you for bringing that up, Mrs. Moore. Single family or duplex, triplex, quadplex. I own single families. I'm a big fan of duplexes. I'm a big fan of apartment complexes. If you can get 80 doors, I'm cool with that too. Now, 80 doors means it's going to be a lot more intensive when it comes to maintenance and upkeep and you paying attention to it. But real estate, commercial, doesn't matter. As long as it's income, I like income producing real estate. If you want to go buy, 20 acres somewhere just to sit for and pass on to your grand, that's cool, great if you have the money, right? But I like income producing real estate on the commercial side, warehouse, doesn't matter, right? Single family apartment complexes, doesn't matter, right? But what's happening, what's really happening in the economy is we have people out here that are still looking to spend money, still looking to stack assets, still looking to lower liability, still looking to invest, dollar cost average, invest in the markets. But you got to be aware of some of this big picture stuff because it can help you make your decision, right? Somebody said, does diversifying my Fidelity portfolio matter? Currently says aggressive growth only started 2 years ago. Ricky, you depends on what fund you have it in. If you have it in an S&P 500, you can have that one fund and you're well diversified. Or I like to have 3 or 4 or 5 different ETFs to hit different sectors from growth, value, cyclical, non-cyclical, small cap, mid cap, large cap. Somewhere in those differences is where I'm going to find my sweet spot of 5 or 6 different ETFs. Again, growth versus value, mid cap, small cap, large cap, somewhere in there. Cyclical, non-cyclical, somewhere in there. Sector specific might be another place to look for. ETFs, stocks, etc. But yes, you probably want to diversify a little bit, but if you have an S&P 500 or a total stock market index fund, you're pretty diversified already, right? Aggressive growth, Ricky, depends on your age. If you're 25 years old, aggressive growth is good. You got a long time before you need the money. If you're 65 years old, you may not want to be in aggressive growth because when the stocks go down and you got to start pulling money out of your account, now it's less money there. Depends on your age, Ricky. Good question. Appreciate you asking that. Zinnia from KC Mo, good to have you. KC Mo right here as well. Let's see, Miss V. The problem is the wages never went up as much as inflation went up. Absolutely, Miss V. Right? In 1980, the interest rate was almost 20%. The 90s was around 7 to 9%. Listen, you're right, Miss V. Wages didn't quite keep up with the higher inflation. Right? Kenneth, NVIDIA's NVIDIA's not as good as Jesus. What are you talking about? Let's see, NVIDIA till 1K. We'll see what happens, right? Somebody said Humpty Dance. Yeah, Willie Willow. Question, is it better to leave a Roth IRA and 401k with the same provider or separate? That's kind of 6 1/2 dozen or the other, Willie Willow. Totally depends on you. If you trust Fidelity, you can do it all at Fidelity. If you want to break it up and have some at Fidelity, some at Charles Schwab, you can break it up. I don't think that it matters very much as long as you have a reputable provider, right? Who's not going to fold next week, right? Don't I wouldn't be doing all of my investing using stockpile, right? Not that stockpile is not a great place, but you just don't know. I like those fundamental, foundational, Schwab, Vanguard, places like that, right? Miss V, thank you so much for the super chat, Mrs. V. I certainly do appreciate you. Thank you. Thank you. Thank you. More than you know, and appreciate your support watching the YouTube videos as well, Mrs. V. Also, I appreciate you, Mrs. V, over on Patreon. I appreciate you over there as well. So thank you so much for the super chat. I appreciate it. Look at there. Looks like my Instagram went out. I guess Instagram is only an hour, right? So let me see what else we got over here. Okay. All right. All right. I think we're still rocking and rolling. Let's see here. People need food. That's why I buy VMT stock up 55% year to date. VMT, not a bad choice. Max 7, big boy blue chips. Let's see. Afford diversification, do it, which is effective. Let's see here. I'm gonna kind of roll through here. Any more questions? Do you like ETFs or stocks that invest in nuclear energy? I think nuclear energy is an emerging, I say emerging, it's been out for 50 years, right? But I don't have a big problem with nuclear energy. I think some of those can be good, but be careful because again, those can be sort of volatile when you're in that particular sector, that subsector of energy called nuclear energy. Let's see here. I don't know much, but I know. Hey, let's see. Good evening, learning and learning. Let's see. You got it, Willie Willow. Listen, I don't want to belabor the point, hold you guys longer. It's an hour live. I thought it was going to be less, but that's okay. I love hanging out with you guys. I appreciate you. And it's been a minute, right? It's been a minute. I'm going to start getting back on here and doing more regular Thursdays. What's really happening in the American economy? GDP, 2 point, what did I say? It's up. It's up, but not up where they expected it to be. Remember, we got our first reading of third quarter today. Next month, we'll get the second reading of third quarter, and there's always adjustments made, right? Keep in mind, election in 5 or 6 days. But guess what? When you see the headlines over the next 5 or 6 days on your internet feeds, in the news, I don't care if you watch Fox, MSNBC, CNBC, they're going to be reflecting their own personal take on the economy as we get closer and closer to election, because they're trying to sway it one way or the other, no matter who you listen to it, right? No matter who you listen to, right? Let's see here. Appreciate it, Steven. Thank you so much. What game is on? I'm about to go watch some NBA, right? It's Halloween, right? If you celebrate Halloween, congratulations to you. I don't really celebrate Halloween. Haven't done it in 50, 45 years or so. But look, I appreciate you guys more than you know. You guys do not know. We just went over the 220,000 subscriber mark on this channel. And guess what? I owe it to you guys for supporting the channel, for supporting a spot on the internet where we're talking about money and we're not putting anybody down. We're talking about money and we're not making harsh judgments or criticizing people. We're talking about money and being understanding that money is different for everybody. Personal finance is personal. And we're also at a space here on YouTube where we're encouraging other people. We're inspiring people, right, to start to look at their money different, be more organized with their money, be more focused on their money, think differently about their money so they can make more money, grow more money, invest more money, pass more money down, and leave a legacy with money. That's what this space on the internet, on YouTube, is all about. It's encouraging people to think and be different with their money. That's what it's all about. As much positive energy as you guys give me, I'm sending it back out to you. So I appreciate you guys so much for hanging in with us. Let's see here. Wait. I got to Mo Blessed to ask the question. What's your thoughts on buying a new build versus older property, single family home in landlord friendly states in the U.S. for executive rental, kind of like Toba? I don't have I would say whatever's most feasible for you, Mo Bless. What's most feasible? What's going to bring about the best profit, right? What's going to bring about the least maintenance? What's going to bring about more profitability? New built, older property for executive rental. What's going to bring what's in other words, to build the new build or to buy the older property, what's it going to cost, right? I would do whatever's most cost efficient to bring you the most profit, Mo Bless. So I had to answer that question. Mo Bless been rocking with me for a while, so I wanted to definitely answer that question. Drop a comment. If you got a comment, drop it below. I'll be more than happy to answer it as I always do on these live streams. Listen, the best person, I got to say it, man. I got to say it. I got to say it. It's really important, guys. Um, the best person. No, let me thank Orlando. Appreciate it. Nigel, appreciate it. Willie Wilo, appreciate it. Mo Bless, appreciate it. Miss Moore, Miss appreciate it. Thank you so, Mrs. Moore, appreciate it. Thank you so much. The best person who's going to take care of the old you is the young you. Take care of yourself and take care of other people. Until the next video. Peace.